If you're new to budgeting and you don't know where to start, in this video, I am going to be sharing how to create a basic monthly budget. Stick around to the end because I have the really easy way for you to automate the process. Hey guys, welcome back to the Finance Peritus YouTube channel. Budgeting by paycheck or by monthly incomes, D's on your preference and financial situation. If you choose to budget by paycheck, you will have a more detailed view of how each paycheck is allocated to upcoming bills, basic spending, and saving. On the other hand, budgeting by monthly income allows you to have an overview of all your experiences and income within the month, giving you a broader perspective on your financial situation. The key is to choose a method that aligns with your financial goals and helps you manage your money effectively. When budgeting by paycheck, you have the opportunity to align your income with specific bill due dates and expectors. This method allows you to break down each paycheck into categories such as housing, utilities, groceries, and discretionary spending. By allocating a portion of each paycheck to cover upcoming bills and setting aside money for savings or investments, you can ensure that your financial obligations are met while also working towards your financial goals. When budgeting by month, you have the opportunity to take the comprehensive look at all your financial inflows and outflows within a 30-day period. This method allows you to analyze your spending patterns, identify areas where you may be overspending, and make necessary adjustments to achieve your financial goals. By examining all your bills, expenses, and income for the entire month, you can gain a holistic view of your financial health. It also enables you to allocate funds strategically towards different categories such as savings, debt repayment, and discretionary spending based on your priorities. Budgeting by month empowers you to plan ahead for larger expenses, track your progress towards financial milestones, and make informed decisions about how to best use your money. To get started with your basic budget, sit down with your monthly income and evaluate your financial goals. Consider your fixed expenses like rent or mortgage, utilities, insurance, and transportation costs. Don't forget about variable expenses such as groceries, entertainment, and personal care. List out all these expenses to have a clear picture of where your money is going each month. By understanding your incomes and expectations, you can create a budget that aligns with your priorities and help you make informed financial decisions. After listing out all your monthly income and expectations, it's time to dive deeper into creating a zero-based budget. This approach teaches that every dollar you earn is allocated to a specific expense category or a savings goal. By meticulously analyzing your budget, you can identify areas where you may be overspending or where you can cut back on expected. Zero-based budget not only helps you track your spending more effectively, but also mindful money management. It allows you to give every dollar a purpose, whether it's for needs, debt repayment, savings, or discretionary spending. This method empowers you to take control of your finance and make intentional decisions about how you want to use your money. Eliminate high-interest debts first, such as credit card balances, to prevent a more interest over time. Consider consolidating or negotiating your debts to secure lower rates and faster repayment terms. Implement debt snowball or avalanche method to systematically pay off your debts. The debt snowball method involves paying off the smallest debt first while making minimum payments on larger debts. Once the smallest debt is cleared, roll that payment amount into the next smallest debt, creating a snowball effect. On the other hand, the debt avalanche method focuses on paying off debts with the highest interest rates first to minimize overall interest costs. Whichever method you choose, staying committed to reducing your debts will free up more funds for savings and long-term financial security. When it comes to managing your fixed expenses, it's essential to allocate a specific portion of your incomes towards that appeal financial obligations. Fixed expenses typically include costs that remain consistent month after month and are crucial for maintaining your lifestyle and meeting your basic needs. Some common fixed expenses to consider in your budget are rent or mortgage payments, utility bills such as electricity, water, and gas, insurance premiums for health, auto or home insurance, transportation costs like gas and public transportation fees, and subscription services, such by accurately accounting for these fixed expenses in your budget. You can ensure that you have funds set aside to cover these necessary costs each month without risking financial strain or falling behind on payments. After covering your essential expenses and savings, it's important to allocate a portion of your budget for flexible spending categories. These categories can include discretionary experiences such as dining out, entertainment, drive, hobbies, and personal care. By setting a limit for each category based on your financial goals and priorities, you can enjoy guilt-free spending while staying within your overall budget. Consider creating a separate fund for special occasions or unexpected treats to add some fun and spontaneity to your budget. Remember that balance is key when it comes to flexible spending, allowing yourself dissipation for enjoyment while also being mindful of your long-term finance objectives. Part 9. Building a robust savings strategy is essential for achieving financial stability and reaching your long-term goals. Start by establishing an emergency fund to cover unexpected expenses like car repairs, medical bills, or job loss. Aim to save at least 3 to 6 months' worth of living expenses in your emergency fund to provide the financial safety net during challenging times. Once your emergency fund is fully funded, consider allocating funds towards other savings goals, such as renovate, down payment on a home, or dream vacation. By setting specific savings targets and automating regular contributions to your savings accounts, you can gradually build wealth and secure your financial future. Remember that consistent saving habits, even small contributions over time, can have the significant impact on your overall financial well-being. Review your budget regularly to ensure you're not overspending and adjust as needed. Analyze your experiences and income trends monthly to identify areas where you can cut back or reallocate funds. Look for opportunities to increase your savings rate by reducing unnecessary expenses or finding ways to boost your income. Consider setting specific financial goals, such as saving for major purchase, paying off debt, or investing for future, and track your progress regularly. Use budgeting tools or apps to streamline the process and gain insights into your spending habits. Proactive approach to budgeting can help you stay on top of your finance, make informed financial decisions, and work towards achieving financial stability and independence. Remember that budgeting can transform your finance life. Let me know in the comments how you're prioritizing budgeting this year. If you found this video helpful, give it a thumbs up. See you in the next one.